Yo, what's happening, traders? You already know what time it is. It's time to flip that damn switch, baby. Let's get into it. Man, just a surreal couple of days trading the NASDAQ. But without further ado, let's get straight into it. So what you'll come to realize, and I always say this, is the market moves in patterns, right? Now, it's not superstitious patterns. What I'm referring to is if you have enough data collection, you will come to realize that the market moves in certain waves when there's high volume times, when there's low volume times. And that is exactly what we did with NAS, right? I saw that we're in high volume time frame and with all of the fundamentals going on, and I mean, I have about 2 patterns that I have looked at, and it just constantly happens, man. It's crazy. I don't know what to tell you guys. It's really as simple as that. But without further ado, let's get into the charts. I'm going to show you guys exactly what I saw. I did break this down beforehand, but that's not to showboast my ego or anything like that. It just goes to show that this strategy is so life-changing and it can help so many people. And yeah, let me show you guys exactly what we did in 2 days. Oh, you know what? I can pop it up here on my screen. You guys can see it's a live account here in the top left corner. Here at the bottom, this week, 32,000. So I had the first trade was $7,000 profit. That's the first trade that we're going to break down right now. And then when I saw another confirmation add up with the first trade, I stacked on that position. And then exactly the day after that, NY session as well, repetitive, same pattern, 16K a day after that. So it's around about 32K in little more than 24 hours. Let's hop straight into it. Let's get this chart up. So on NASDAQ, the first thing I want to do is I want to track that pressure, right? I want to look on the daily time frame and see where we're at on the overall higher time frame. Because the very first thing I want to do always is I want to trade with a higher time frame bias. Now I know it's easier said than done, because when you're in the charts and you're ready to take positions, and I mean there's a lot of emotions getting involved, right? Am I doing the right thing? Am I trading with a higher time frame momentum? You're never always sure. So I want to introduce the word probability. Okay, if you're new to trading, the word probability is most likely going to become your best friend. It's not, you will never have 100% confidence when you're trading. That's not the key here. The key here is so that you can have as many probabilities as you can stacked in your favor. That's what we want to do, right? We want to look at data collection in the past. We want to add that up, build confidence, because confidence is key as a trader. And the minute you have that, you'll start to realize that it becomes easier, right? You start to see the same things over and over again. You guys will realize what I'm talking about in a second. So the high time frame was bullish the minute we closed above this bearish candle, which happened on the 23rd of June 2025. So we closed above this bearish candle. Let me go down to the H4. And for the guys liking structure, I mean pretty clean structure break. Right over here, we have a lower high tested again, and it broke right over here. So this is not a debate whatsoever. We're in a bullish trend. But the most simplest way that I can show you guys that I look at structures on the daily time frame, I look at the high and I look at the low. And the minute we broke and closed above this high, I was like, okay, all right, bet, we're in a bullish trend. So on the H1, what I wanted to see was I saw that this, for the purpose of this video, let's just call my 50 SMA the baseline. Okay, so we tested and we closed above on my baseline with a bullish engulfing. That is an entry, quote unquote. I did not take this, but that indicates to me personally as a trader, that there's volume coming in the market. Now, that's why I always say there's no such thing as a late entry. This could have been an entry, but I did not take it. Somebody else in the other side of the world took this. What this did is this gave me an indication that we're going bullish. So as you guys can see, I'm not talking a lot of bullshit. I'm jumping straight to the point, and that's what I want, right? I want people watching my videos scratching their head being like, yo, is this it? Is this what this guy is saying? Can this really be it? And I promise you it is. It's just repetition, repetition, repetition. So I saw this bullish engulfing, and that started my idea. On the 15 minute, we broke above on structure as well. And then now we're on the 15-minute time frame. So 15-minute time frame, what I like to see is that the previous daily low to the previous daily high. I like to track my equilibrium, which is the middle of the previous day. And I saw that we were above equilibrium. Okay, let's just mark this one here, equilibrium. And then on the 24th of June during NY session, I saw that we were breaking above, during London session, we were breaking above our Asia session. So this is a little bit of a debate. People will say that this was the high because of the indicator drawing a high right over there. I see this as the high because that's the previous high that was created, and then we simultaneously just broke it, and then the uptrend continued until the start of London session. So that's an important note for me to understand. Then we came back down in London session. So we already broke above Asia. That's important. So I understood that the trend is continuing to be bullish, and I wanted to get in on that. The minute that London drew another high in the first hour of London session, and it came back down and created a low, now we have our box. Okay, we have our box for London session. You will see that the market was inside of that box during the whole of London session, and then the market remained stagnant for the first hour of NY session. The first hour is very important. This is where we will talk a little bit later about this, but candlestick maturity comes to play in this, and it's very important, and that's exactly why I took this trade. So on the 30-minute, just want to reiterate the importance of the high and the low. The high was created and the low was created. The market remained stagnant going into NY session. The first hour tapped into that low. But take note of this low being created pre-NY session, still during London session. Then on the 15-minute time frame, you can see that we tapped that low again with my baseline test. We tapped it another time, and we tapped it a third time. So now I know that the market is indicating that we're potentially going bullish, right? And that was what we're looking for. So now I'm waiting for two things to happen. One of which is for my 18 and my 9 to confirm the trend, and that's exactly what they did. I just want to place a horizontal line above the high. The minute that happened, the market closed above that high. So this is very simple, right? And I need you guys to focus on this. We all know, wait, let me draw it out. Now I'm definitely not Picasso, so just take note of that. We can see that the market is in an uptrend. So when I'm always referring to candlesticks, a candlestick is literally just a retracement. A candlestick on a higher time frame is literally just a retracement on the lower time frame. That's what they talk about when they refer to the market being fractal. So that's very important. You'll see this will be one candle, and then this will be another candle. This will be in one candle, and then this will be another candle. So it's very important to understand if the higher time frame is bullish and you're seeing a retracement, you will probably want to get in at this low, right? But not me. I learned my lesson. I learned to wait for the break of that high because I want to see if the trend continues. I'm referring to this break. So I want to see if the trend continues bullish. Exactly the same here. I don't want to try and predict when the retracement is stopping. I do not want to catch highs and lows. That's definitely not what I want to do. What I want to do is confirm my thesis and then take a trade off from that. So that's exactly what happened. We got the break of the high, and then the market retraced back down, and then if you were still not sure, it broke that high again. Okay? So now all you got to do is you got to manage your trade, and that is where I pride myself in as a trader. I'm really proud of my risk management tool. So the very first thing I can share with you all that I look at is my exhaustion areas. And the minute we were in this trade, I was tracking my exhaustion areas. Exhaustion areas are from the high to the low of the wicks, because that's where the market pushed down previously. That's the market did not have strength to break through a certain level. That's why I call it exhaustion areas, because the market got exhausted at that certain price level. So I wanted to see if in the near future the market hits that level again, if it gets exhausted, or if we have enough aggressive buyers to push through. And that's exactly what happened. We did not break down below those exhaustion areas again. We continued to push higher. So that was the very first trade, the one of 7,000 and the other one of 8,000. And then the second trade, that breakdown is going to be very simple. We had exactly 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 the same thing happened again. We had a high of Asia session, the market closed and broke above. We created an exhaustion area, so that tells me that this is a key area because we exhausted it. The market then came back down during London session, so this is pre-NY. So this is a little bit earlier than the previous trade. The day before the trade was during NY session, so this one happened during London session. I saw that we broke above, but still not confirmed that thesis because we hit the exhaustion area and we closed below it. We did not break and close above. So there's a few key elements that you need to look out for. But I mean, this was just a picture perfect trade. The market tested our baseline again. And prior to that, we created, I wouldn't call this equal lows, but we tested our baseline again with a 1 touch, 2 touch, and in 3 touches. So we were bullish on the daily time frame. We had touches. We broke above Asia session. Our exhaustion areas were tested and then came back down with retracement. So I'm getting in on the trade right here, folks. The minute I got in, I had to look on my 5-minute for structure as well. Let's just go back to the 5-minute. So I can see that we flipped with the momentum. The market continued with that trend with a constant bullish engulfing candles. We had 1, 2, 3 bullish engulfing candles. Now, of course, we saw the exhaustion area here at the top, and that made me a little bit wary of what's going on in the market. It was after the first hour of NY session, apologies. So I saw this rejection, and the minute I saw that, I got a little bit skeptical. So that is the thesis on the second trade of 16,000. I did not stack on this trade, unfortunately. No specific reason why. I gotta be real with you folks. I guess I missed it. That's the reality of trading. Sometimes you'll be on it, sometimes you'll miss things, but that's just what happens. I'm overall very happy with the results. And yeah, I mean, pretty simple analysis. I tend to not overcomplicate things, folks. I've been in this for 10 years now. I've looked at every possible way there is to trade. I even studied how the stars align to take trades on GU or USD JPY. That obviously did not work out. So a no bullshit approach to my trading. I absolutely love it. I hate the word strategy, but this strategy has really been changing lives, and I'm super stoked to share it with you all. I hope you guys learned something. Remember to flip that damn switch.